careful. Now remember, the key here is follow through. Okay, so here's the entry point. Now look at this. The next 15-minute bar pushes down, but look how the market comes back up. Then the market goes basically nowhere for over an hour. Okay, this is the sure sign that this trade is either going to go nowhere or go against you. Okay, this is picture perfect as far as that's concerned. Remember, when professional traders get involved with the market, they won't pussyfoot around, is the way I say it. I hesitated a bit because I'm not sure people might be offended by that. I apologize. It's just a saying I picked up somewhere. Not to mention the fact that the market is well outside of the sweet spot. But had you taken this, for whatever reason, you decided to trade well outside of the sweet spot, which, of course, is violating the rules, this is what you get. The market goes absolutely nowhere all the way until about 2 o'clock in the morning Eastern Time, which happens right there. Like I said, they crank the market up. You can see here it comes into resistance. The market forms this little triangle pattern right there, and then, boom, drops off again. So if you were following the rules and waiting for the market to get to the entry point inside of the sweep spot, look at this, boom. Here is your entry point right about there. Very clean. Like I talk about momentum move right from the beginning. Market closes down again, and then it's off to the races. The market takes you out on the first profit target very, very quickly, and then, of course, follows through. Gives you a little bit of indigestion, as we say, right in here. However, forming another triangle pattern before continuing slightly to the downside. So depending on what your exit was, you would have had a very good exit right in here, a logical exit once the market came back up right about to the entry point, and then started to run into support. Also a good reason to get out. But truly, this engulfing pattern right here on the 15-minute candle was more than enough reason to jump out of that particular trade. Nothing really setting up to speak of here. We do have, I will say this, a possible short trade again. You can see here I zoomed back out on the hourly bar here. Here we have support. We have support. We have support. So the market has stopped along this line several times in the past, and I think we've got to honor that. But you can see here that the market is gaining some traction in this area. So we're going to have to be careful again. Watch the sweet spot. This is not an autopilot trade. This is something that you're definitely going to have to watch, and this is what we're going to take advantage of. We're getting close to this 9,600 level. Anytime the market gets to even numbers, you can oftentimes see the market push through them dramatically. So we're going to try and take advantage of that. So here's the trade that I'm looking for, short at 1.9615. We want to get in slightly ahead of it. This is a, this is a 30 pip stop. This, again, should be a momentum trade. If you see the market get down here to 96.15 and then it gets to 9600 and it stalls out, that's the signal that the trade is not working. And again, watch out for the sweet spot. We're really not going to be breaking into, I think, a long trade until we get back above this level here. So the prior long that I was talking about is still going to be right about the level that I'm looking for. So that's long at 1.9780. I know that's a ways away, but we want to make sure that the market has some momentum and is starting to sweep to the upside. The only exception is going to be if the market makes a very fast run like this, where there are only a few bars, it's just very active. You're going to want to watch out. Again, not an autopilot trade, but one that you sit back and watch.